Henry, the CEO of QuestFusion, with the Real Deal What Matters Live. Today I'm here with the CEO and the Director of Business Development for Pravati Capital, the litigation funding firm. So Charlie Brown is the head of business development, and Alex Chucri is the CEO. These guys have been around since 2013, but Alex has been in this industry since 2003. He's a serial entrepreneur, and so is Charlie, and we're happy to have him on the show today. So welcome, you guys.
Thanks.
So tell us a little bit, what is litigation finance?
Litigation finance is a situation where people that find themselves in a lawsuit can come to us for capital, and we're able to help finance their case. And typically what transpires in lawsuits is it's usually the David and Goliath story. You usually have a situation where you have a person or a company that has a suit, and they're going up against deep pockets or more sophisticated, heavy lawyered group. And then what we do is we finance them to give them a fighting chance.
Okay. So any areas of specialization around patent litigation or corporate litigation?
I've been in the space, one of the first movers in the space since 2003. And a lot of us in the United States started with consumer. John Q. Consumer gets into a car accident situation, and we just help that time frame of settlement.
Okay.
To the situation where somebody is an intellectual property situation where there's millions of dollars at stake, and we help finance that entrepreneur or the corporation to hire the right firm. We even provide a little bit of working capital for the firm to stabilize, and then they're able to pursue. And then a lot of what we do is with mass torts, which is bad pharmaceutical situations or those kind of cases. We finance those as well, and as well as PI law firms.
So corporations, individuals, kind of the whole gamut, anything that relates to civil law.
Yeah, we finance. Right now we have 70 law firms we're financing. We have done over 6,000 cases, a couple $100 million AUM, and then growing dramatically on the AUM side.
Yeah. So anything related to like criminal law, or everything related to more civil litigation?
Mostly civil litigation.
Okay, cool. So how would you define litigation finance?
Well, it's really just it's a bridge loan in some ways.
Okay.
It's an expensive non-recourse bridge loan, and the way you look at it is it's non-recourse. So if the case loses, we lose our capital. So it's not inexpensive capital. It's venture capital with a debt wrapper.
Okay.
That's how to really look at it.
And is it typically at interest rates that are kind of
interest rate milestone driven?
Okay.
But it's cases lost, we lose.
Okay. So you obviously have to do a lot of investigation up front to have, kind of your handicapping process has to be pretty good to be able to stay in business. So how do you go about that with kind of the breadth of different things that you're involved in?
We are, 5 to 10 lawyers full time, deep, very critical underwriting parameters. We tend to get into cases a little later, so we can read the tea leaves. We tend to do more portfolios. If a firm comes to us and says, I want you to do this one case, we usually convince them that they should give us the entire portfolio. The cost of capital goes down for us, and then it creates more of a win-win situation. So we use a lot of portfolio strategies. We use a lot of collection strategies, but we have a really good track record on investment analysis.
Okay. So what's kind of your track record of success and the deals that you get involved in and back?
So as we've matured over a period of time and have a really good understanding of the legal world and how to, it's really structured finance at the end of the day. You want to be last money in, first money out. Right? So we try to structure it from that perspective. When you're applying finance to the legal world, it's very delicate because you have ethics, there's a lot of rules with the legal world, so you can't apply it like you would corporate finance.
Okay.
So we tailor make our strategies to fit those types of situations.
Can you share kind of your percentage wins, or is that something that's
very high?
confidential?
Very high. We're in the 90 percentile.
Oh, that's excellent. So basically, your investors are getting an equity return based on a debt financing strategy.
We say no a lot.
Yeah,
we say, so out of 30 reviews of corporate portfolios and cases, we usually do one.
Yeah, well, I mean, to have a high 90s,
Yeah.
you have to have a pretty good screen, and you got to say no a lot.
We say no a lot.
Yeah, that makes sense.
Pass on a lot of opportunities.
So for the audience of entrepreneurs out there and kind of startup CEOs, can you give an example of maybe an earlier stage company that you've done something with?
We're doing one literally as we speak. And it's a very interesting situation. App developer, very great strategy. Went out, raised money, had a board of directors that ended up being self-dealing on the side, not good actors. Turned into a little bit of a legal battle. Their lawyer reaches out to us. The plane starts to dip a bit, as far as, morale and technology, there's a lot of unknown. Obviously investors are upset because they raised, over $3 to $5 million in that range. So we stepped in, did the analysis, liked the case, strong law firm. We are putting a significant amount of money into the litigation. Or that's how we plan on getting paid back, the litigation. And then part of the use of proceeds we provided to the firm to lift the nose of the plane back up and stabilize.
Okay.
And we think it's going to be, already it's made a big change for their company.
Oh, awesome.
So that's the type of thing that I think we can do, especially on early stage, because this is my 9th startup. And this one, I've been in this space for 17 years. And so what we see a lot of is situations where a corporation will have a good suit, but they don't necessarily want to put it to do the expenditures, or all the disclosures that they have to do, and have their stock price dip. So it's an off the balance sheet type transaction.
Okay.
We step in, we finance the cases, the case costs, and then we're typically non-recourse to the solution or the exit of the case.
Okay.
Right? So how the success. So what it really helps corporations there, it's a negative environment to be dealing with a lawsuit all the time, right? And so business owners, whether it's a large ongoing technology company, or it's a guy that is a contractor that got hurt in a car accident situation where you can't work anymore, they have the same sense of nervousness or unconscious. It's a stressful situation. So by us stepping in, and then also our knowledge of the legal world and our legal staff to help their point, we tend to point out to their legal staff what we think. It really does help.
Yeah, I mean, it's huge. I mean, I've been in a variety of different things through my career, and I mean, it's time consuming, it's stressful, it's expensive, it's distracting. So these kind of things can definitely be helpful. Now, let's say you take on a case that has a large amount of risk. Do you kind of offlay any of that risk, like to a reinsurance company or anything like that? Or do you you're kind of self-funding on all the cases that you take?
Typically, we've self-funded. Reinsurance is more of a London-based strategy. Our competitors in London have built models for that after the event type insurance.
Yeah.
We like that. Anything we do abroad, we tend to try to put that in place.
Sure.
But it gets expensive. And so for our cost of capital, typically we're dealing with portfolios. That's usually how we offlay risk.
Okay. So, I mean, both of you guys have been entrepreneurs for some period of time now. What's kind of the one big takeaway, and this is for each of you guys, about your entrepreneurial journey that you can share with the entrepreneurial audience out there? Charlie, you want to go first?
Yeah. Hang on for the ride. Don't get too excited. Don't get too depressed. You have to think long-term. You have to think a long-term strategy. And it's all about building the right partnerships and just, from my experience, having the right advisory board really helps.
Yeah.
So getting good counsel, don't get too high, don't get too low, and plan for the long term.
Yeah. You know, what I've learned is that startup or early stage companies, it's not a race, it's more of a marathon.
Mm-hmm.
And if you can take more pragmatic steps, you know, and be able to slow the process down so less mistakes are being made and you're making more prudent decisions, tends to be what I've learned. It's not as important to get to the end game as fast as a lot of guys think. At least that's what I have found. You know, in our world, you know, I've seen a lot of, you know, we are not, for as well as we've done, we have not been overcapitalized as far as the manager, right? Because we run funds, so the manager typically is paid based off of how we raise capital through the funds. But we have not taken a lot of capital in to keep our dilution low. But what has happened is that we've made a lot of good decisions just through, you know, hard work and efforts versus, you know, raising extra money to go bring on staff that you don't necessarily need to do. So we've been very focused that way, and we also work a lot on, and it's been very helpful, is I have a life coach that's a business coach where he's helped me for years, but I brought him into my business. So now I have him work with all my team. Okay. So they work on it with a personal basis, and that way I know, you know, they can help someone that helps the employee on that basis, but also helps, you know, take what the objectives that I have for the company and spread it across all of the client, all of our employees, so they all know where we're headed. Yeah. And then it's easy to set milestones. You know, every morning, 10 o'clock, I get vital threes from all my team on what their objectives are. And if I see that it's off, I immediately change it. Okay. And that way it keeps everybody on the same page. So I tend not to want to micromanage, and then they're able to just execute as they see fit. But that extra 2 or 3 hours on a Monday, pays off a lot. Focusing on the what versus the how, and, you know, having that kind of what's mission critical, what's not mission critical, what they think is important versus what's really important. Sure. It's a nice way to go about it. Yeah, for sure. Well, how do people get a hold of you guys? PravatiCapital.com. So that's Pravati, PravatiCapital.com. Right. Yeah. PravatiCapital.com. All right. Sounds good. And super excited to have you guys on the show today. Thanks, Alex. Thanks, Charlie. This is Patrick Henry, the CEO of QuestFusion, with the Real Deal What Matters Live. Definitely check out Pravati Capital if you have a need for litigation funding. These guys know what they're doing. Thanks. Thank you.